Good morning, everybody. My name is Mike Hodgson, CEO of Serabi Gold, and I'm going to talk to you today about our operations in Brazil. As the usual disclaimer, so I point everyone to that. Okay, we're in northern Brazil, in the state of Pará, in a very prolific sort of artisanal gold field called the Tapajós, and we've got four sort of main drivers for our growth going forward. First of all, we've got our cash flow from our current operation. This is a high-grade vein mine, two mines we put into production back in 2014, and we ramped the production up to 40,000 ounces last year, our best year of production, a little over $1,000 all-in sustaining cost. And this year we're going to increase that modestly, only about another 10%, but it's going to certainly be good, sort of a good increase and going straight to the bottom line almost. And that's really coming from the second growth, which is here, which is ore sorting. This is something we've worked on a lot over the last 2 years really, and at the end of this presentation I'm hopefully going to show you a short video about how it works, but it really does help improve the quality of our operation. We're mining high-grade veins underground, and for dilution control is absolutely everything. The in-situ grades of these deposits is typically sort of 15 grams per ton, so the name of the game is obviously getting as little of the waste into that material before it actually goes to the process plant. And being a plant-constrained operation, this is obviously critical. So the ore sorting is a huge opportunity for us, which we think is going to be tremendous, and I think in the entire region it's going to be a real game changer. As well as that, we've actually got another asset which we bought just over 18 months ago, 2 years ago, called Coringa. And now Coringa is almost a carbon copy of the operation that we've actually got today, Polito. So we are in the stage of permitting that. It's pretty much build ready. The process plant is there. It only needs to be assembled. So we're going through the permitting process at the moment. We had a very successful public hearing just last month, which was completely supportive. So we're really hopeful we're going to be able to start construction before the end of this year with a view to going into production in the back end of next year. And finally, we've got some great land package where we think we can actually add some organic growth. So those four things we think are pointing us towards the 100,000 ounce marker, which is in the next 2 years. Just a little bit on the corporate overview there. We trade on London and on the TSX. We've got a market cap of around $60 million, $60 million. Cash in the bank about 14 million. We've actually got a debt of 7, and Coringa, the asset I just talked about, we've got an outstanding payment of $12 million to make. But the good news about that is both of that debt there and that outstanding payment will both be made before the end of March. So we'll be debt-free and 100% owners of Coringa. We've actually enjoyed a nice recovery with our share price over the last year. We were down at sort of 23p or 50 odd cents here in the middle of sort of spring last year. We've had a very nice increase over the last sort of 12 months, and we're now sitting at about 80p or $1.20. And liquidity has improved an awful lot as well. Just a little bit, so a bit more detail on exactly where we are. So in the state of Pará, which is in the north of Brazil, very mining-friendly state. Well known for all the iron ore on the eastern side, but the Tapajós is this area over here, which is a big artisanal gold field, 30 million ounces of artisanal gold mined over the last sort of 30, 40 years. We're the only hard rock producer. So although we're quite small, we are a very big fish in a small pond, and that's been pretty important for our permitting. And certainly the public hearing which we just had, we had enormous support in the local community at that meeting. And as I say, the fact that Serabi has been in the region for about 12 years, we're here to stay, and everybody knows that. So we're anticipating success with our permitting at Coringa. What Coringa will bring is we already have around 500,000 ounces of resource at Polito. It's been a long-lived asset. We've almost replaced the resource year on year, and we see Coringa as the same. And that's a little bit of it's a lot of information on one slide there, but basically it's really just to show you what will actually happen to the all-in sustaining cost. We're currently at about 1,050. With Coringa coming on stream with some organic growth, we think we'll come down to around 950, 960. Coringa itself, very similar to Polito. We've got a PEA. I know PEAs may have a little bit of a reputation of being, there have obviously been some spectacular failures with PEAs over the last sort of 3 or 4 years. But this PEA, I think, has more robustness about it. First of all the costs are lifted directly from our Polito operation, which is just up the road, so you can't get better than real data. And they've actually been inflated 20%, which is a bit penal, but that's That's the way it is. We've also got the previous operators, Anfield, did a BFS on this asset as well in 2018. So there's that to go with it. But between the two, we're predicting around a 40,000 ounce mine, very similar to Polito, very similar costs, 25 million build cost. The process plant's already there. So we see this as a very seamless way to actually grow from our current 50,000 ounces up to approaching 100. Financing-wise, we have just secured a convertible loan with one of our biggest shareholders, so that will allow us to make the final property payment, and with that, we're going to start work at Coringa. One thing I'll say about Coringa at this moment in time, although we're still working through a permitting to build it and put into production, we can actually start the mine today. We already have the mining license, and we will be doing that, all with a view to actually de-risking this PEA a little bit more and positioning us well for lending, possibly at the end of the year, with a number of banks, including Sprott, who have been a very good partner for us in the past, numerous groups are interested in helping us with the funding of Coringa. So there we are. We're in the Tapajos is this region here, big artisanal goldfield, 30 million ounces of gold produced. The main federal road comes down here. I like to say we're at the front door of the Tapajos because the Polito Complex is that red polygon there. That's where we have a process plant, and we feed that with the two ore bodies, the Polito ore body here and the Sao Chico ore body, a satellite down here. And between the two, we feed our plant-constrained 500 tons per day with typically 8 grams per ton feed. Coringa, our new deposit down here, which is build-ready, bar permitting, very similar deposit, separate process plant. There's no real direct operational synergy, but the fact the road is, there's a federal road between the two. There's a town called Novo Progreso here, which will certainly have some of our people staying and living there. There is going to be operational synergy, management synergy, etc. So we do believe the current 1,050 all-in sustaining costs will come down to around 950 when we get Coringa into production, and we're a 80 to 100,000 ounce producer. Little bit of a view, this is what Polito looks like, and this is what Coringa will look like when we get underground. You can see there very clearly, very high-grade veins, very narrow vein mining is the name of the game, dilution control. And then we're mining a series of veins like this, typically great contrast, and you see the guy there, it's a combination of long-hole mining and jackleg or selective mining like that. And the key is obviously mining as much of that and as little of this as possible. But what we cannot get out of, what we cannot lose in the mining process, this is where this ore sorting is going to work so very well. As you see there, typically we're mining 8 grams per ton, 500 tons per day, good recoveries, flow sheet very well understood. Coringa, more of the same, basically. That's exactly what it is. The geology is the same, the mining method is going to be the same, the whole approach, the metallurgy, very, very similar. So we actually do see it as a very low-risk growth for us. We're not exactly suddenly leaping into doing something very different to what we've done in the past. So it's advanced in terms, it's build ready. We've got the process plant all there on the floor to assemble. We've got the camp built. We've got a lot of mining equipment. It's just a case of actually getting through the final stage of permitting. We've had our public hearing. That we hope to get what's called the preliminary license, which is the one where you need stakeholder support, etc., local community support. We hope to get that before just early Q2. We'll then submit our basic engineering and hopefully get the construction license early Q3, middle of Q3. So we will be building going into the last moments of this year. And in terms of the PEA summary there, I think you can see the takeaway from that is we've got a resource here of 500,000 ounces. It's very much like Polito. Polito started life in 2003 with a 400,000 ounce resource. It's been mining now for on and off for about 15 years. We've mined 380,000 ounces, and we've still got a 400,000 ounce resource. So it's very much a similar thing. These types of deposits, you don't really run out of resource. It's economics you've actually got to control. But we can see there that a 280,000 ounce resource from a 500,000 ounce, 280,000 ounce in a mine plan out of a 500,000 ounce resource, it's a pretty robust project. And there's some of the timeline which I've just talked about. We're going to start the underground mine actually in April. We hope to get the key license, the preliminary license. This is this one here, where if you've got community support, that's the one you've got to get. The rest are, to a degree, procedural, really. So it's you've already approved. You've got to say community support. That's a graph just to say what I'd said before. You know, Polito has been in production now for sort of 15 odd years, and we've replaced the resource year on year. So again, I don't think there's a concern about our ability to not continue doing that. Now a little bit on the exploration. That's the Polito Complex, and we can see there, here's the Polito mine here, and the resource, and the process plant. And Sao Chico is a satellite ore body down here. We actually truck about 50% of our material up this road, about 20 kilometers, to a central plant here. So between these two deposits, we're feeding the plant with about 500 tons per day of typically 8 grams. But also in this, what we did in the last 18 months, the black polygon is actually our exploration tenement, which actually envelopes our 2 deposits. And we flew an airborne survey. That's that blue polygon. We flew about 45,000 hectares of airborne magnetics and electromagnetics. And these work very well, as you saw on the slide before. The ore bodies here, the gold is actually contained inside sulfides. So the sulfides obviously lend themselves very well to geophysics. So as long as there's enough massive sulfide there, you can actually find the sulfide zones, and then hopefully you'll find those sulfides are gold bearing. And this is obviously very key to the ore sorting as well. When we actually got the results of the survey, we were pretty taken aback by that. Here we have the Polito license up there and the concession, and here's Sao Chico. And between the two, this huge east-west anomaly, which is obviously some kind of geological or rock type difference. Certainly we are now enjoying the sort of interest of some larger groups like Anglo American and RTZ have certainly been looking in the Alta Floresta goldfield to the south of us, and they're now viewing the Tapajos also as a potential porphyry gold area. So this is, I mean, we have a huge exploration tenement here which we cannot really control ourselves, so we're certainly talking to them about the regional exploration upside here, but certainly that's something which we're now doing geochemistry over, and it certainly could be a very significant feature. But back to the day job. There's Polito, zoom in onto it, and again, this slide, the takeaway from this slide is really just to show people that these veins just go on forever, really. I mean, we've got a resource of 500,000 ounces over a strike length of 1 kilometer. We've now traced these veins over 4 kilometers. So there's plenty of upside here. They're open along strike, they're open at depth, they're open laterally, and you just keep finding them. And there's a cross-section just showing there, saying, we're mining all these veins at different heights, some up here, some down here, and the grades typically are always about 0.5 meter at sort of 15, 20 grams per ton. So again, dilution control and mining these as well as you can is the key. Sao Chico, as I said, that's the satellite ore body, which is over down here in the bottom left-hand corner. This is the exploration license, the mining license here, and this is exploration. We've actually, the geophysics that we did from the airborne survey, we followed with ground geophysics, and these are IP anomalies, which we are now currently drilling, and we are already getting sulfides in the results and bearing gold. So we're pretty excited about this. And the size of these compared to the Sao Chico deposit we're mining there, that's what a 300-ton per day mine looks like as a geophysical and IP anomaly. And so these things, which all have artisanal mines sitting over the top of them, are obviously pretty compelling. So we're very excited about what might happen here. So this brings the question, what actually happens next with Serabi? We can expand Polito a little bit more. We're putting in the ore sorter to help actually increase the grade going to the process plant. But if these start taking off, then rather than trucking ROM from this deposit all the way to Polito, we'd probably want to look at some kind of processing here, but we're not there yet. Coringa, our new deposit, that which we're permitting, I think again the takeaway from this one is this is an 8 kilometer long garimpo, and we've actually got 500,000 ounces defined with drill holes. There's a lot of gaps here, so again, I think this is ultimately, after this has been mined for 10 years like Polito has been, it's just going to be a swarm of veins with the same resource in 10 years' time as it has today. So I think that'll be the situation there. So 40,000 ounces at Polito, going to 50. Bring Coringa on stream, another 40. Bit of organic growth. We feel we can actually get to 100,000 ounces in the next 18 months.